And joining us now from our Nairobi studios to give an update on the Kenyan markets is Ken Minjire, his fixed income and money markets analyst at Stanbic Investments. Good to see you, Ken. Start us off with a $600 million syndicated loan. And is this the best way the government can raise money right now?
I think at the time that they came up with the syndicated loan, things were a bit tight in the Kenyan market. If you remember, that's the time that the shilling was just shooting all the way up. The two-year bond had just been issued. We were seeing consistent undersubscriptions. We had covered about 30% of the government borrowing. This was towards the end of the year that they budgeted for the financial year 2011-2012. So the two-year had come in at 22%. So at this time, things were pretty tight. And looking at the Western markets, looking at the European crisis, so the Euro bond was out. So the government was a bit tight because it looked like they would not meet their borrowing targets, and expenditure was actually ballooning. So what happened was they took a syndicated loan, which at that time looked like a good deal. But towards the end of, as we saw rates begin to come off, inflation begin to come off, we saw a lot more investors come back into the market. Also, what we saw was oversubscriptions consistently as investors looked to lock in these rates. So what may have looked good around October, November, did not look so good, does not look so good now because it's pretty expensive. If you calculate the cost of the loan plus what they're paying over LIBOR, comes to roughly between about 10 to 11%. So that's pretty expensive. But it's also, I think when CBK looks at the bigger picture, they actually had no choice but to go ahead with the plans because, as you had mentioned earlier, it's actually good for our credit rating and also for other European markets because of our plan to issue a Eurobond in 2013-2014.
Let's move to the money markets, and there appears to be a lot of liquidity right now with the central bank in the market again today for, I think, 2.4 billion shillings worth of repos. What is happening around there?
Liquidity, I mean, the market is flush with liquidity. I think most of it is driven by government expenditure as we move towards the end of the financial year, which is in June. So we will see a lot of ministries and government parastatals rushing to spend their allocations for the financial year. And going forward, I think we may keep up with these rates up until the end of the financial year. I think it will be a struggle between CBK and trying to keep the interbank and the money markets under control. Because yesterday they came in for about 12 billion. They picked about 7 billion at 16.5. Today, as you said, they've picked 2.4 billion at 17. So they do have a target level for the interbank rate, which is +2 or -2 CBR. Right now, we expect probably the interbank average today will close at about levels of between 14.50 to 15%. So they will try continue pushing it up to nearer levels of where the CBR is. So we will see this volatility probably for the rest of this quarter.
The shilling touched 3-month lows early this morning. I don't know where it is closed, and we'll have that in a moment. But do you think we're heading towards the 80 psychological level in terms of stability against the dollar?
For the shilling, for the rest of this quarter, as I said, with all this volatility in the money market, we will see this the shilling play around quite a bit. It's moved out from the levels we were seeing, which had been range bound for quite a while, of about 83.25 and 82.75. Those levels, it's moved past that. And if liquidity keeps at these levels, we will see a lot of pressure come onto the shilling. And also, as we move towards the end of this month, actually, if you put this together with end month demand, especially from oil importers, as you noticed, oil prices have gone up this month. So this may put more pressure on the shilling. So for the rest of this quarter, I think the shilling will remain under quite a bit of pressure.